Hello everyone, welcome to MS Virtual Digital Banking Trip. This is Sumit Kariwala, India Bank's analyst at Morgan Stanley. I'm glad to host the next session with HDFC Bank. We're joined by Mr. Srinivasan, who is the Chief Financial Officer of the bank. He joined the bank around 2 years back, before which he had a long stint with Citigroup for almost 27 years and has held various regional and global leadership positions in diverse geographies such as Singapore, Hong Kong, New York. We are also joined by Mr. Parag Rao. He's the country head for payments, consumer finance, digital banking, and marketing at HDFC Bank. Mr. Rao joined the bank in 2002, and under his leadership, HDFC Bank has grown to become the market leader in payments business and has retained this position over the years. We also joined by Mr. Ajit Shetty, who's Vice President of Investor Relations. Please note that this session will be of 50 minutes long. We'll start with some opening remarks by the management on their digital strategy, post which we'll take some questions from investors. A standard disclaimer before we start. Please note that there are participants in this session, unlike me, who are not from Morgan Stanley Research, and their views can differ from those of us. Without further ado, I'll hand it over to HDFC Bank management. Srini, over to you. I think so you can help us articulate the digital strategy, and then we can have Parag talk about the payments leg in more detail.
All right. Okay. Perfect. Thank you, Sumit, for this opportunity, and also take the opportunity to thank all the participants for joining today. It is a privilege granted to us, and we appreciate that. The way we perhaps will get started, Sumit, is in order to talk about digital, we should get back to some roots in the sense that we should talk about the evolution of digital. Where we are now, then the digital 2.0, I'll take everything few minutes, couple of minutes, 2-3 minutes each, right? Then digital 2.0, what it means and where we are. And then we will also take this opportunity to talk about certain press notes that we have released today as it relates to our IT structure and the situation. We'll take that on right at the beginning in the opening remarks. Then we'll have Parag Rao talk about one broadly digital, again, certain ecosystem platform-related matters, as well as the payment systems and all of that. He heads all of the digitization as well as the payment processes. So he will give a business overview on those, and then we'll get back to you, Sumit, on that, right? So that's the kind of a structure we'll follow. Now, in order to get the evolution context, which we have said in the past, but just to recollect in 2-3 minutes, this dates back to maybe 2014-15, when the senior management, MD, and the team visited Silicon Valley, met several Silicon Valley players, and found out that the fintech revolution is there, happening in a grander manner, and is there to stay and will be disruptive at some point in time. And so, that is the genesis for thinking about how we should be the first-class digital bank, right? Disrupt ourselves rather than letting somebody handle us and tell us what to do. How do we disrupt ourselves? Play a champion-challenger type of roles, which even today I will tell you how we are playing that, because the existing one, think about them as champions, and then the challenger, which comes in within the bank, that tries to challenge to say, why not this approach, and so on. And then it transcends all the functions, all the verticals, and the product groups, but we'll talk about a few. That's the genesis of how things happen, right? And then the thought process went to defining how do we take this across and define it for implementation. Then that's where the 8 customer journey definition came in, which is address it through these customer journeys of save, pay, invest, borrow, shop, trade, insure, advise, right? So across these kind of broadly, all of everything that somebody wants to do in a bank falls against these 8 customer journeys. And then how do we now make digitization across these customer journeys? That's when several things came. I'm going to touch upon one or two, a few of them, which is the back-based implementation that we had in 2018 was one such event in terms of trying to rethink and remodel. We were one of the first banks to have digital banking. But then the back-base was a revolution in a different sense, trying to give customer different experience. So that was one thing, right? And then we had, in order to get that from a lending side, while the Backbase takes care of transaction type, savings account, and so on and so forth, card sites, then from a loan side, you think about the 10-second loan as one innovation journey that came about, which until today cannot be replicated by anybody. The reason for that is there were certain ingredients to put in place. When we talk about digital, it is not about what the customer touches and feels on the outside, which is 10-second loan. Somebody feels that I touch it, I get it within 10 seconds. But it is what happens behind it, including the digital account opening process, the DAP journey. So that means it's very, very elegant in form of how you bring the customers in through the front end. Then the analytics engine, which the data warehouse that we have, which is one of the oldest and as of today, 20 years richest in the country from many bank point of view, the analytics engine that drives all of these decision making. And to some extent, we also have AI, and talk about digital 2.2, where that is taken to different level of scale. And that is what drives the 10-second loan. Then you got the loan against shares or the loan against mutual funds, which is a single click. How do you get that across? Then that is from the, then we talked about the virtual relationship management again, which is how we cannot afford through cost and various other logistical, we cannot afford to have the 60 million customers that we have serviced through physical RMs. And we have seen where there is an RM, that is a relationship management approach to banking, the kind of an engagement of the customer and the revenue is multiple than if you don't. And so born out of that was the virtual relationship management, again implemented 5 years ago, and we're taking that also to the next scale in the digital 2.0. But in 1.0, that was something that we started and scaled up to 6 million customers, 7 million customers operated out of that. Then these are, think about, then we got the chatbot, the EVA chatbot that comes on, enabling customers to type in a query and get the answers and so on. And then you got on the payment side, the Smart Hub and the Smart Buy and the Pays app and so on that goes with it from a pay point of view. Then comes the wholesale banking, where through the API process and host-to-host integration with various corporates, which has stood in the last 2 years, which has stood us very well in the last 6 months during the COVID period, or even before the COVID period, last 4 quarters, where when the banks want to look for, when the corporates want to look for banks with good amount of capital and good amount of liquidity, can immediately switch and do preferred banking with us, right? And that's part of the API and host-to-host integration, where right from lending to trade automation to FX automation, so sitting in their office through their host process, they can simply do an FX transactions with us, right? So all of this part of the CBG corporate banking. Now, on the SME side, the digital processing enabling us to bring in new customers by the day and going into deeper geographies. And again, when we talk about SME digital, we are also talking about how customer documentation as well as the kind of an algorithms that run to analyzer, that the analyzer that determines what sort of a relationship this is going to be and how do we cash flow based analyzer that can get a lending across to SME. So that is also part of the digital 1.0 that we have done. And the insurance advisory that goes with it, where we have the advisory coming. Then comes the CSC digitization, where we said semi-urban and rural, and that also enabled through digitization, because you know that the diverse geography, if you start to operate like a metro or an urban type of branch in all of these places, then it is going to be exorbitant and it's not going to be viable from a cost to income point of view. So the CSC with a network with the Information Technology Ministry's output of CSC, where we networked and through their computer processes sent the lead, and about 1 lakh of them we have who are business facilitators. More than 12,000 of them we have already signed up as business correspondents, which they can do as much as a branch can do. So that is part of that network of where we did digital 1.0. Then we started many things in the digital 2.0 space too, as we came into late last year and this year. And COVID accelerated a few of this, and where we went live with the Insta account opening, right? We had the DAP journey in 1.1, and we need to improvise more on that through the digital 2.0, the Insta account, which went live in April, and so that was part of the sustenance of the account opening even through the COVID period. And the video KYC that immediately followed the instant, because naturally through the COVID period you need certain things to supplement. And the Smart Hub, which went live recently, and then various APIs. APIs is a journey, right? You you roll out a few at a time that is available for people to consume, or we consume somebody else's API and take it in, right? Either way it operates. And then the My Apps, which you have seen, let it be the clubs or the societies or the organizations, the temples, the institutions, the hospitals, the educational kind of colleges and universities, through the My App process, where how we integrate through the API as well as providing the My App approach to them, which is how we have integrated and operated. These are part of the Digital 2.0, which are already live and kicking and working, all of these kind of digital journey. Now, getting to Digital 2.0, you can think about Digital 2.0 in a few manners, few kind of dimensions, let's call it dimensions. One is where it is enhancing and making it much more better on the existing business and facilitating that. And it has also got some back-end productivity kind of tool that comes with it, both our sales force as well as the other back-end facilitation on Digital 2.0. And it has got some new business, which is also front-end new business generating that comes, right? You can think about these dimensions as Digital 2.0 on the customer experience, making the bank customer journey frictionless. For example, if there were certain applications coming in and there were certain handoffs and it takes a day or so to process something, how do you instantly go and do these things, right? And how is an API-based approach in the front end? Think about Adobe as an example on the front end, right, where you can have hooked on through the APIs. It becomes frictionless, where you can open an account if you want in a minute or 2 minutes, and with the minimal amount of information, because through API process you bring and populate across various kind of both internal and external information comes in and goes on, right? And then there are several other applications on the customer enhancing journey in Digital 2.0, which are in the pipeline, including rural, or including the kind of call it things like customer experience hub, where across various channels where you can try. And all of this again through enabling through APIs, and the analytics and the underwriting capability also taken to the next stage. That's part of what I may call about the existing one, but enhancing all of them, taking it to the next stage to support these. Because you do need, when you want to cut the turnaround time and give that kind of a frictionless journey to the customer, you need to support all of these with that back-end analytics and the AI engine supported, which is what part of the 2.0, we are in several stages of getting them in, right? And then there are some kind of internal workspace, employee experience, right? One app or the Salesforce unification, omni-channel experience for us, which is an RM or a virtual relationship RM or a phone banking RM or any kind of person. How do they have a single approach? Look at the same customer kind of a transactions, and same customer narratives are available. Customer can hop from one channel to another channel, but get the same experience because the RM at the other end is accessing the same back-end experience to provide the same kind of answers and same kind of solutions. That is part of another journey that we are trying to work on, but which is a back-end, right? The customer doesn't have visibility to that. It's an internal Salesforce visibility. Then another back-end is also, refurbishing and getting to the next generation of the data warehouse, because as I told you, we have a data warehouse for a long time, one of the largest and the most depth data in the country, and we are getting that to the next. And then same with the Backbase and FlexCube, getting to the next version, call it the upgraded version of digital banking, which is the internet banking or the mobile banking type of processes, which are enhancing what we have existing, right? Then comes the other one, which Parag will talk much more detail, is the building the ecosystem model. Let it be the health first or the trade first or the auto first or whatever, right? All of them, and the payment kind of a processes and ecosystems. Parag will dwell deep into it, but that is the kind of another Digital 2.0 that goes into it, right? Then for all of this, the 2.0 also includes two more things. One is establishing a kind of a focused organization itself to address the technology. So that means you don't burden the existing, since you are now rethinking and reimagining the entire journey through these kind of a customer experience model and taking to the next stage, then how do you bring a new organization? Kind of a digital-only IT organization, digital bank-only IT organization type of, right? How do you drive into that aspect of it? That is part of people enhancing skill sets and bringing in more both quality and quantity, the right type that addresses and drives this, so that we look much more nimble and we are actually delivering in a much more nimble manner, because that's what is called for. Once you touch upon some of these technologies that I touched, the turnaround time to make changes on the fly, it has to be today you think, tomorrow it is delivered and customer is able to touch it. That's the kind of experience. So how do you build an organization also of people and processes? That is part of Digital 2.0 too. And then the last thing is, which we talked about 3 months, 4 months ago too, which is how do you have a bank within a bank, which means a kind of a challenger bank, which is a digital-only bank within the overall bank. So that means the digital-only bank challenges the traditional bank, which is here, right? The traditional bank itself, as I'm explaining, Digital 1.0, Digital 2.0 is becoming much more digitized bank. But then how do you have only a digital bank that challenges even this to be always on the edge, so that we are progressing? So this, I would call these as something that is transformative, and that is what we are trying to address it in 2.0. Now, the next few minutes about the kind of a press release or the notes that we put out today in terms of the IT and various other Reserve Bank and implications and all of that, so that it can preempt some of the questions that people ask, right? You know that we have had, unfortunately, we've had a few downtimes over the past 2 years. One we had in November 18, and the second we've had in December 19, right? And there have been internal, external people who've been involved looking at the root cause and creating remedial action, and we are for most part done with that. And that includes RBI looking at the root cause as soon as the incident happened and giving recommendations, and we implementing corrective actions to overcome it. And they are all different. That means it's not a repetitive issue, but one issue is not connected with the other. But then there are a couple of issues that we have had, which has caused downtime, right, for a few hours that has not enabled customers to do their regular transactions. Now, as we were mostly done with those kind of remedial actions, and we were hoping the Reserve Bank will come and review it and say, okay, we have done, and if anything more, they will tell us. Then another unfortunate incident happened on November 21, where we had the power outage. Completely different, right, from the left field, a completely different matter. We have a data center which is an outsourced facility, in the sense that the facility is managed by a third party, but the processes and systems are ours, right, that operates there. And then there is a state power grid, the two sources of power grid, two grids, one under maintenance for the weekend, the other one was functional but failed. And then there is a third backup, which is the generator that had to go. The generator normally switches on to automatic, but particular day it didn't switch on. And then there is a mechanic, the technician who goes, which is again part of the outsourced data center facility manager who goes. And then to switching on the switch, there was an error in switching on, right? Manual error in switching from automated to manual. And that caused a disruption for a few hours, where the businesses were, the customers were not able to access or do transactions. So that was the pain point that triggered one more round of Reserve Bank review and actions and etc. And that is what culminated in what today we put out as broadly. One is that Digital 2.0 new business generation activities we will not launch, and if there was anything imminent, it will not happen. There is, as I described, some of those Digital 2.0 activities, they are more strategic in nature, and these were temporary. These RBI has given certain things to not to do. They are temporary in nature. One is do not launch Digital 2.0 initiatives, which are new business generating initiatives, right? So that means we will wait for RBI to look at it, review and approve before we get on with those things. The second one is the new card acquisition, right? Bringing on new card customers on books. So he said, wait, don't bring any new card customers. So these are the two things. And then we'll have to review the root cause of what happened and take the remedial action. And then RBI will come and look at it and say, you seem to have taken all the actions, and then say, go. And this is deemed temporary, and it's written as temporary. And so we believe that in a short order, we will complete it in terms of what we need to do, and invite for another inspection and a review, and thereby get us moving to business as usual mode on all of these. And what it doesn't do is that all the existing customers, existing transactions, existing products, none of them get touched, which means we can have a new personal loan, we can have a new auto loan, new corporate banking customer, new corporate banking loan or SME, anything we can have. These are the two things that I talked about, that you don't bring in new card customer and you don't bring in new digital 2.0 technology to implementation, which are business generating. The 2.0 initiatives which are purely back-end or facilitation, employee facilitation, sales force facilitation, those are not new business generating. They are facilitation, progressing more higher productivity and better management and customer experience and so on. So those are all right. So new business is what we are talking about. And the second thing is that we continue to develop. There's no stoppage or prohibition to say even 2.0, don't develop, nothing like that. We continue to develop all of them. We continue to bring people into even the technology organization that I talked about, which is the next generation of technology organization. How we do, we continue to bring people to it, and we can continue to develop them, go through the UAT, test it, and be ready for implementation. And then as these kind of inspections happen and they clear it, then it can go for live. So that's what, in a nutshell, we can think about today morning's what we talked about. Again, same, the next generation of mobile and next generation of internet, we will hold back because that's part of 2.0. We will hold back on that until all the inspection, etc. are done. But it doesn't affect any of the existing mobile banking, existing internet customers, usage, product, services, functionality. None of that is affected. So that is how we have deemed as not material, because these things are more strategic. A quarter here, a quarter there, it doesn't make a difference. And these are temporary in nature in terms of how we think about and how we will overcome by taking those remedial actions. With that, maybe I will stop and I will request Parag to dwell a little more deeper onto a few of those, both the ecosystems and the payment processes and etc. And then from there, Sumit, you can take on from there.
Yeah. Hi, thanks. Hi, am I audible?
Yes, Parag.
Hello.
You're audible.
I'm audible. Okay, hi. Good afternoon, everyone. Thank you, Sumit and team. And thank you to all the participants. As I said, appreciate the opportunity to speak to all of you. And thanks, Srini, for setting the context at a bank level. I'll drill down a little more into the payments business. So starting off, we're very clear. As I said, we're dominant in the payment business, and the endeavor is to continue being dominant in the payments business, including adding elements of digital. And I'll talk to you a little bit about where we're talking. There are multiple parts to our payment business. There's the entire issuing side, credit cards being the largest within that. And there's the large acquiring side, again, very strategic investment and business for the bank. There's a consumer finance leg also to the entire payment business. But fundamentally, the three key pillars which we're focusing on, and we continue focusing on, is obviously the ability to drive scale into the business. Payments business is about scale, and scale brings about obviously clear benefits in that you're addressing all the relevant target segments which the bank wants to, and that strategy is in sync with our larger retail banking strategy. Scale also at a very at a P&L level, if you may, brings in that level of de-risking, because you would have a wide diversified portfolio. It also answers and addresses maybe some of the questions or the activities which many players may be doing in the market in terms of maybe having a penetrative pricing strategy in some segments, etc. But scale is one clear driving vector for our strategy. Okay, that's number one. Number two, we've always maintained that, and we continue to maintain that, because early on in the days of our payment business, we understood that customer engagement, a thing which Srini alluded to very strongly, customer engagement, which means post-acquisition of the customer, what does the customer do? What does the bank do to engage him, to enrich his experience, not just on the product, but on the larger suite of products which the bank is capable of offering him, and how you deepen his engagement, how do you increase his transactions, how do you increase the value throughput on the payment platform, I think becomes extremely critical in driving a very rich portfolio in terms of the key metrics of spends, revolve, throughputs, transactions, active customers, and thereby leading to obviously a much more richer and longer lifetime value of the customer. So portfolio management, whether it be on the issuing side, whether it be on the acquiring side, and whether it be put together, I think remains the second very equally important pillar of driving of our growth. The third pillar clearly is our approach to the market, which is a combination of platforms, partnerships, and alliances. And this is where we sort of get into and very relevant to the current environment where you see a large number of newer players getting into the payment space beyond just the conventional banks or the processors, whether you call them fintechs or whether you call them large merchants or TSPs. You can put in many other labels, but there are a lot of new players coming in, each one bringing a set of competencies, either in terms of UI UX or in terms of brilliant platforms or in terms of penetration into some segments, etc. And so therefore this strategy of building platforms, partnerships and alliances, I think is another extremely important leg of our growth strategy in the payment business and our continued endeavor to be dominant in that business. So that's the third leg, and I'll talk about each one of them. I think the fourth obviously is product, keeping on enhancing product using digital, and the second leg of that piece, the other side of the piece, which is not typically visible, is ensuring that we continue digitizing our entire back-end processing platforms, our underwriting platforms, so that you're able to deliver in a very cost-optimized manner, very seamless manner, products and services to a vast geography through especially the digital means which we're talking to, and also including to the partners which we sort of handle. So these are the four key pillars which we continue focusing on. Digital, as Srini talked about, whether it was digital 1.0 or 2.0, is only helping digitize all of these activities in a new world where customers are also adopting digital as a means to transact, either acquire products or products and services, or sort of continue engaging with the bank. Okay, so point number one, as I said, we are dominant and we continue remaining dominant. We have robust growth plans at a very basic level on the customer card, on say the issuing side, the credit cards. Okay, we have very aggressive acquisition plans. During the pandemic, for various reasons, obviously we've slowed down a little bit, but I think we are already back to, as we speak, back to levels which are higher than January 20, which was pre-COVID, in terms of new acquisition. That growth engine continues to grow because we continue investing in new acquisition, and so therefore that will be a continued funnel into our very large, close to 15 million credit card portfolio. The same approach we're doing on the debit card side, because as a bank, as you know, we're investing again in rapid acquisition, both physical and digital, in the new account space. New accounts means number of debit cards, which means that these are again payment instruments in the hands of our consumers. And so on all the fronts, we continue investing in very large acquisition, and we'll see the rapid growth journey happening. Like I said, we've already crossed the levels of January 2020 in terms of monthly new acquisition, and that's on an upward track. On the acceptance side too, we've continued that, again, barring a small dip during the pre-COVID, the lockdown phase, April to June, July, etc. We've once again picked up our acquisition and driven our rapid acquisition. There too, in the acquiring side, it's the same story. We've crossed our new merchant acquisition levels of January. There, a significant portion of our incremental merchants are now on the app. Some of you would have heard about the launch which we did just a couple of weeks back in terms of SmartHub 3.0. I'll talk about that in the product section, but that is helping us to further increase our acquisition category. Mind you, I must sort of reiterate that when we source merchants, especially in the merchant space, it's not just about the merchant or a POS machine or a payment gateway or an app. Ours is a holistic bundled strategy when we go to the merchant. So when we go to the marketplace, we source not just the merchant, instrument for which he transacts with, but we also source the underlying account, the current account, and of course the family accounts. And so therefore we're actually driving a merchant ecosystem which consists of one side of the payment network rails which we are laying down, and of course at the bottom buttressed by a very strong and robust liability relationship. And that's always been our strategy in the merchant acquiring space. We look at the merchant acquiring space as a combination of payments and liabilities, and layered on top of that would be assets. And so therefore, unlike most of the other players in the industry who have moved the processor route, okay, we continue to remain invested as a bank because it's a very strategic investment for the bank, not just in terms of laying the railroad for payments and our large issuing business, but equally so in terms of it gives us very strong inroads into the MSME or the SME or the trader space, as you may call it. It's a very important constituent customer segment for the bank itself, both in terms of all the three areas: payments, liabilities, and assets. Okay, so the same again, once again, same too on the consumer finance side. We're already, just to give you an indication, compared to last October, which was this season, we did close to 2x times of what we did last October. On a run rate basis, once again, we are higher than what we were in January in terms of our consumer finance leg. Our consumer finance business, which is a combination of clean loans and a lot of loans on the card business, card with part is both credit and debit, I think rides on the same rails which the acceptance business is laid down. Most of the merchants whom we deal with as a merchant acquirer are also people who offer EMI, or as I said, fixed EMI loan type of products at the point of purchase. And so therefore, in one way of looking at it, the EMI business or the consumer finance business is the asset layer I talked about, which rides on top of it. It's also a very strong means of merchants being able to offer their customers more value by offering purchase plans, convenient purchase plans. There too, as I said, investment in growth continues. So all the three are demonstrating robust growth. We continue, as I said, investing in that growth. In terms of portfolio, moving to that leg, Srini alluded to a lot of investments which we have done for many years in terms of the deep data mining which we do, the data warehouse, positive investments in artificial intelligence, artificial investments in deep analytics, customer analytics, and because of the size of the business, when you add these skill sets with the deep, rich data which we have within our own ecosystem, I think it makes for a potent force for us to actually have micro-segmented offers right down to the level of one merchant or one consumer. Understanding his business, is a customer's behavior, not just in payments, but also across the larger banking relationship which you would have, and therefore helps make our customer portfolio management, or in other words, in layman's term, a customer marketing that much more sharp and very focused. And we continue driving that. So as I said, deep understanding of analytics, of customer behavior, using analytics, using data, using a combination of data across multiple points in which a customer uses with us, and then converting them into very sharp, focused, micro-segmented offers based on propensity, leveraging our merchant network to get the kind of offers which a customer may want at his or her place of residence, say in deep geography or online. All three put together make for a very strong and powerful strategy of customer engagement. The clear focus is on how do you continue engaging the customer on a more frequent basis? How do you ensure that the customer keeps on coming back to you to use your instrument? How do you ensure that the customer keeps on deepening his relationship and enhancing his relationship with us? Becomes an extremely very large focus area. That's one of the reasons why we drive probably one of the best portfolios, not just in terms of customer engagement metrics, but also in terms of credit metrics. So I won't get into that area, but the philosophy is essentially the same. Of once you get a customer, engage him from day one throughout his life cycle and drive a lot of portfolio activities. So that's the second very important leg which we continue seeing. Coming to the third leg where we applied I talked about partnerships, alliances, etc., etc. Clearly, in this expanding world with new partners coming in, and of the likes of, on one side, you have the Paytms of the world, you have the Geos of the world, you also have the large merchants, if you may call so, the Amazons and the Flipkarts of the world. You have the large fintechs, the Facebooks, the WhatsApp, the Googles of the world. Okay, and then you have a large number of TSPs, if you may call so, them multiple names, working, whether it's the BillDesk of the world, whether it's the Razorpays of the world. These are many new categories which are coming. Each one of them are investing both in the physical space and in the open space, but fundamentally offering platforms, offering deep insights into customer segments and a variety of other efficiency tools, etc. We've clearly included as part of our growth strategy strategic partnerships with players, players who bring to the table either one or more of the two, which could be, as I said, acquisition capability, strong digital platform capability, good UI UX capability, processing capability, segment dominance. As I said, it could be a combination, one or more of combination of these three. The bank brings to the table, quite obviously, a very large existing customer franchise, which is profitable, which is deeply engaged. It brings to the table, once again, a large physical distribution. It brings to the table very strong underwriting capabilities. It brings to the table very strong data analytics and customer insight management. Put together, we do believe partnering, choosing the right kind of partners helps us, as I said, add to the growth engine, which I talked about in the first pillar. It also helps, obviously, brand salience, because strong partnerships and alliances with good brands, HDFC Bank being also one of the leading brands in India, I think sends a very strong message, confident message to consumers, saying that here are two strong partners with strong brand values, bringing together you maybe a combined financial services and say the area in which the partner is strong in, to bring you value to the table. I think the essence of the partnership exactly is that if both mutually benefit, I think it really makes for a win-win game, and we can offer therefore much more stronger, larger partnerships in the marketplace. So partnerships and alliances will be one more leg of our growth strategy. We're convinced that it's an era of partnerships, not just for the reasons also I told you, but also for reasons to say that classical marketing or business strategy, which is stick to your knitting. We don't know as a bank. We have our competencies. We are also clearly aware that we may not be able to emulate and be the best in class in many other competencies which are required in today's business. That's where the partners come in. If we can meld together the competencies of both the partners, I think it makes for a great win-win situation. It also, I'd like to talk to two more parts of this particular strategy. Platformization, I think, has been a strategy for the bank over the last at least 6 to 7 years. We've created brands like SmartHub, SmartBuy, Festive Treats. These are platforms, and the core philosophy of this platform approach to the strategy versus isolated standalone product strategy is that we can bring the full suite of products and services which the bank offers onto that one platform. That platform also, and therefore a customer can avail of the entire suite of banking products onto that platform, and that's the philosophy if you observe in SmartHub as a platform. The platform also gives very simple, easy onboarding capability or integration capability for merchants or consumers to get on board, and so therefore the entry barriers are lower. Third is it brings to the table a lot of the other ecosystem benefits which we can sort of build to it. We're able to add what we call value-added services onto the platform beyond just banking services, which help the customer or the merchant, whichever be the case, actually sort of get either the best deals or enhance his own business capability. So platforms, therefore, is the philosophy which we're sort of adopting, and we'll continue seeing sort of more efforts in terms of platformification approach to the marketplace rather than just a product approach. 2-3 of the names I mentioned, I think are doing pretty well. The festive treats, for example, which you just now saw, again, is doing very well. We've brought together our ecosystem of merchants and issuing partners together so that customers get the best deals and the merchants see a large number of footfalls. That's the core objective of the platform. So platforms is good. The other strategy which we are talking about, not just in the banking, in the payment space, but also across our other retail asset spaces, what we would call banking on the edge. One facet of this banking on the edge would mean that if I have a merchant partner who's strong and who enjoys strong brand names and a lot of customer footfalls, how can I enable the payment platform which I have embedded in that merchant, let's say, to be able to offer additional banking services through the digital API route to the customers who walk in. Example, just to give you an illustrative example, if the customer of mine, a merchant of mine has, say, a digital POS or a touch screen based Android POS machine, which accepts payments in all forms, whether it's wallets or tap and pay or what have you. It also offers financing facility, which is through the EMI route. But can that customer also interact at that same terminal and say take a temporary limit enhancement on his card through the API route? Depending on the type of merchant, can I offer, let's say, a fixed deposit or other such banking products at the same time? Can I offer him an extended warranty product? Going beyond, as I said, his payment transactions on the same terminal, again, through APIs. So these platforms and partners, when I bring them together, form a very strong base for our banking at the edge, whereby we are not just talking of just the physical 5,500 sort of branches or the 15,000 sort of ATM network, but I can actually extend banking to, let's say, 200,000 of my merchants, which enjoy significant footfall. So footfall, and thereby extending the reach and availability of our products and services, all through the digital and API route, all through and there, as I said, there it's completely zero touch. It will be practically zero touch processing, one touch for the customer, using a lot of analytics and propensity to drive that. So the platform, the partnership and the alliances approach, as I said, helps us reach out to another set of additional customers, potential customers, in far-flung geographies or in deep segments where we have sort of strictly invested in. And so that therefore that becomes another third level, important level of our strategy. Coming to the fourth level, where we use digitization to sort of drive a lot of operational efficiency. Clearly, the path which I think the industry is going, not just in India but globally, as you see, is that payments is now coming of age in terms of clear scale. That sort of brings about a clear shifting, business model. You may work so therefore with scale comes the business paradigm of saying that how do you bring about scale? Number one, how do you look at the business through, say, lower unit revenues or lower unit profit, but actually grow your profit pools through significant and rapid buildup of scale. Okay, and that's where cost and cost optimization, ensuring that there's a seamless journey, ensuring that you sort of squeeze out hops or impediments in the conventional processes which we drive. So digital comes in. So digital, we're very aggressively digitizing a large portion of our customer journeys behind the scenes, which the customer not only touches but also behind, to do processing, to do remote sort of underwriting, quicker underwriting, all in seconds versus the other. And that obviously drives a lot of two things, as I said, a lot of efficiencies. It also helps extend your products and reach and drives and becomes the core engine of driving the platforms, which for example, I talked about, wherein that platform is then ubiquitously available to any customer 24/7 by 365, anywhere he wants, in whichever form factor he chooses to factor on. But it's powered through sort of digital APIs at the back end, bringing in different partner offers melded in a file. So that's the fourth leg of our very strong continued strategy to grow in the dominant space. Put together, as I said, gives us a lot of confidence that as we continue growing, we'll continue remaining dominant in this payment space. I'll pause here and sort of take it on to the next stage in case there are, as I said, question and answers on either part, what I said or Srini said. Sumit?
Yeah, thanks a lot, Srini. Thanks a lot, Parag, for your detailed opening remarks. I've got a lot of questions from investors. What I'll do is I'll bunch the question related to the press release today, and maybe I should start with that. So there are 2 or 3 questions. I'll do them one by one. So first question is, have there been any data breaches as a result of such outages?
No.
Okay. The second question
because
is,
none of them are to do with that. What happened in the latest one was a power outage. So that means the systems were not available for processing. Right, a customer is trying to get in to do a transaction. The systems were not available for a few hours in this particular facility that we had for 21st of November. Then the other 2, which is the December 19 and the November 18. It had the mobile banking was down. People were still able to do internet banking. So if you go to your computer and log in and you can do. The branches were operating perfectly all right. All of the other transactions, the corporate banking transactions, all of them were perfectly okay. The mobile banking was down. December 19, November 18, for different reasons, not connected reasons, different reasons. And then the latest one was the power outage.
Got it. The second question is, one is very clear with respect to what happened on power outage in November 2020. The earlier 2 events, what was the real issue because of which there was an outage?
In terms of technicality, I know perhaps I don't know whether we want to go into which part of the hardware or the network or the security systems or whatever is the component that goes into various processes. Some of them failed, right? That was the problem. And that is one of the costs. And we've tried to remedy it through several processes, that is redesigning some of the process workflows in terms of how the system works. And we've also added more capacity to see maybe it is the throughput and certain kind of, there are bottlenecks in perhaps the several stages when a transaction comes in. It comes through the network into the security layer and then hops across several layers before it goes to the servers, right? And then where the applications are hosted and customer database is available. So we've tried to solve various things to see what can be one of the causes. And there is no particular clear-cut thing, but we have analyzed through technical expertise in terms of where we need to augment capacity, we have. Where we need to certain version changes or upgrades that we need to do, we have done, right? Compatibility issues, if there are any, we resolve. So many things have happened. We are, for most part, we believe we are done with the November 18 or December 19 requirements to make it, to make the remedial action to fruition that we have done. But we need to bring people to inspect and say, yes, these were the causes, these were the action plans. That internally we, along with both the bank and along the bank's consultants, we all did. And then RBI, as part of their inspection process in November 18 and December 19, have also looked at it and given remedial actions. You try these 4 things or 3 things, whatever. And we have done those things too. So now they have to come and check it to say, yes, you got it done. But the point is, yes, there were a couple of instances. And now when there's a third instance, sometimes, it is not relevant whether it was a A or a B or a C that impacted. Your customers were impacted. So that is the outcome. That is what the central bank looks at. Say there could be very disparate reasons that caused your 3 over a period of these 2 years, 3 instances of issues over a period of 2 years. But the point is, across all of them, customers are impacted. So that is why more than a particular thing, there are different things that happen.
Okay. I'll take last one on this topic, which is how long will it take for the RBI to finish the inspection? Any timeline?
See, the discussion with RBI as well as the what we have put out in the notification too is called temporary, right? It is determined to be temporary, and the temporary could be a month to 3 months. I don't want to put a particular time frame to it because it is temporary in nature. And as time goes by, we believe in a month's time that we would have done what we are supposed to do, and then invite for review and inspection. Thereby, from there on, it takes up the role of reviewing the kind of a capability enhancement has happened, and actions are robust, and thereby good to go. So time will tell, but it is called temporary.
Very clear, Ashwini. So I think I have time for one more question, and I'll have that for Parag. Parag, can you talk about the credit card space and the potential disruption that can happen because of buy now, pay later? You can have some of these tech giants launch credit facility under UPI, and that's doing very well. So what kind of disruption can you see in the credit card space, and how will HDFC Bank manage that?
Okay, fine. So buy now, pay later, which are financing products, UPI, which is again transaction products. I think both are welcome trends. Both are doing, I think, the right role right now in the context, and what I mean in the context of the way payment ecosystem in India is. It's still a very small proportion of the overall consumer commerce which happens. Okay, it's growing rapidly, but it's still a smaller proportion of what we call PC, personal consumption expenditure. And so both the efforts of multiple players in the lending space, though smaller yet, but UPI definitely, I think, is helping expand the marketplace. What do I mean by that? There's a significant, large new user set of customers who have adopted or got onto payments, electronic payments using UPI. It's a very convenient form, and I think hats off to NPCI for doing a great job in coming out with a true innovation, which is actually targeting cash, if you may call it so. It's also targeting digitization of the smaller ticket transactions. So as you would know, UPI, the ticket sizes are significantly smaller than typical card transactions. And so it's helping digitizing that. So, and of course, buy now, pay later is a very recent phenomena which is growing up. But both are actually helping expand the marketplace. We believe that's a good sign because obviously, even though we're dominant in the payment space, it would be impossible or very difficult for only one player to sort of play that role of trying to expand the marketplace. India requires innovations of this nature to really expand the marketplace because it's preparing customers, onboarding customers onto the electronic bandwagon, which in itself in the longer term is a very good habit. We've also observed and very clear trends in many of the other developing economies or other developed economies where people have onboarded themselves onto digital with small ticket sizes, small outlays, if you may call so. And then as soon as they've got comfortable and expanded their menu of transactions onto that particular instrument, they've actually upgraded or migrated upwards into more evolved forms. We clearly see that also happening. We also see a situation where consumers are going to use multiple forms of payment. For some type of transactions, they may continue to use UPI because they are very small ticket, they're convenient, and you know the risk is lower. For certain medium type of transactions, they may end up using a debit card. For the higher ticket transactions, they may continue using a credit card. So in actually, you will see that all the payment forms have grown. Even if I were to remove the anomaly of the lockdown, which was in a sense artificial, you see actually each one growing. Obviously, UPI is growing at a much higher rate because it's expanding the market. The denominator was also pretty low. But card transactions, both credit, debit, I think are growing very rapidly. So each one is growing at its own pace. And I see that happening in the foreseeable future. So we don't look at it as disruption. We actually see that if there's a customer today only doing UPI, okay, we see it as an opportunity that he's a future customer of ours, and therefore it's only expanding the marketplace for us. So that's one thing. Having said this, we're a very large acquirer of UPI transactions, both on the P2P and very soon on the P2M, and so therefore adding UPI as an incremental way of transacting is actually feeds into our acceptance strategy. Our acceptance strategy is very simple. Can I go to any merchant or potential merchant and offer him in a simple plug-and-play manner one platform which helps him accept any payment form which his customer chooses to pay by? And so therefore, I accept all cards, I accept all franchisees, all networks, I accept wallets, I accept UPI, etc., or any other new payment form which comes in. So we are deeply engaged with many of the players in the marketplace who are large, and we acquire a lot of the transactions for many of these players in the marketplace. So UPI is also a very integral part of our growth strategy, especially in the payment space. Exactly the same logic which is happening in the buy now, pay later space. It's essentially opening up an area which is the unsecured small ticket size lending, which hitherto banks were not in, or most financials were not in. Okay, it's convenience loans available at a point and purchase, available on 2 clicks of a button, etc. And we too have our FlexiPay product, which is actually doing very well. We're again riding and using that product, riding on our merchant acquiring rails, riding with a lot of our merchants who we partner with, whether it's the Mintras of the world or whether it's a PayU, Naspers of the world, etc. And this exactly targets that thing. So in this space, as we do believe, more number of robust players coming in will actually expand the financing market or funding market, if you may call so. If I were to draw a parallel to, although not a clear parallel, but a parallel to what happened, say, in an economy like Brazil, which is very similar to India, is that there, if you see point of purchase funding is a significant higher proportion of the spend. I do believe last I heard it was close to almost 45 to 50% of electronic spends are actually funded at the point of the merchant. That didn't happen overnight. Obviously, it started close to again 20 years ago. But that's the growth part I see also happening in India, where products like this, buy now, pay later, or card EMI on a credit card, EMI on a debit card, will be drivers of funding at the point of purchase. This will help not just consumers go beyond their existing current cash flows to actually buy products and services, but we do believe it will be also a large driver of consumption at a retail level. And so that's a good phenomenon happening. So that's our view on both these products, both these categories which you talked about, Sumit.
Correct. Thanks, Parag.
In a nutshell, we welcome these things. In a nutshell, we welcome these things.
Got it. The moderator has allowed me 1 or 2 more questions. So yeah. I have one more question, which is, can you discuss the implications of new umbrella entity initiated by RBI to promote retail digital payments? And how do you see it? Is it an opportunity or a threat? And there is one more question. There are some media articles which are suggesting that SBI, Bank of Baroda, and HDFC Bank can make a joint application for this. Anything that you want to talk on that?
Okay, the first bit, taking on from a point I made in just the previous discussion, I think the electronic or the payment journey, the digital journey, I think is only just started in India. Okay, given the kind of commerce, consumer consumption, and even institutional consumption, what typically we would call B2B, I think we've only started, and there's ample enough headroom to sort of grow. In that scenario, you already see NPCI is pretty big. So I think the thought process of the regulator was that given the opportunities and the headroom available, not just in the retail, and retail is a very large word. UPI is in some parts of the retail space, okay? But there are many other areas, I think, which have significant potential to grow, whether it is in consumer trading, whether it is in the deep geography, connecting the mandis and ensuring that everything is digitized, whether it is in remittances, etc. There are many other large players, etc., large places and opportunities to grow, where I think RBI, the way it looks at it, is that there is a need for having, again, platform and infrastructure entity coming in and doing exactly the role which, say, NPCI did to expand that marketplace and drive explosive growth in many of these areas. Obviously, all of this is in the direction of what was set out, a couple of years back with demonetization, which is Digital India. So I think the thought process was that there's ample enough space for maybe 1 or 2 more entities to actually offer unique, disruptive, as well as also innovative products and platforms to drive the digital agenda of India. And I think that's where the whole genesis of NUA has come in. I think they've thrown it open to a large number of participant players in the existing ecosystem, whether it be banks or whether it be players. They put down some conditions, etc. And so we look at it as a very strong opportunity to grow the overall electronic pie, or the digital pie, if you may call it so. You have examples in China where beyond the banks, you have the Alipays and the Tencent, which single-handedly grew. Hello? Yeah, sorry, there was some. Yeah, so that as example, I think India is going in a much more balanced and democratic way. And so NUE, we welcome NUE. I think it will only help grow the payment ecosystem in India, and it will help obviously all the players and of course the consumers, of course, because it will drive a lot of innovation in this space. On the second question, may not be able to really comment upon it. We are interested. We're clearly interested. We are talking to many players. There are many players who have also shown a lot of interest. But right now it's in discussion stage.
Got it very clear. In the interest of time, we'll have to stop here. Thanks a lot, Srini. Thanks a lot, Parag, for all your insights. Thanks, investors, for dialing in.
Thank you.
We'll stop here.
Thank you.